Do you feel like there's more risk right now in stocks or bonds? And I'll preface this by me saying that I'm similar to Westbury as being a perma bull, where I've always thought of a long-term investment as, if you think about diversification as how much of your future gains are you willing to give up for a smoother ride along the way. And I think the long-term outlook is for stocks, but in the short and medium term, with everything going on, do you feel that there are right now in this current environment more risks in stocks or bonds?
Yeah, I think for right now, given the outlook for earnings, given where we see the economy going, I think the trajectory for stocks is better, certainly better long term, but I think it's certainly better short term and medium term here as well. I just think that that yield of 1.5% roughly on the 10-year Treasury, that yield is just not going to get it done. I realize you can get better yields in other areas of the bond market, municipal, things like that. If I'm going to go into the fixed income side of the marketplace, and look, for a lot of investors, they have to have an allocation in that space. They should have an allocation in that space. I think that you're going to want to take on maybe a little bit more credit risk and maybe not necessarily reach for low quality bonds, but I think looking for yield besides just traditional money market funds, bank CDs, things like that. I think treasuries, I think you're going to want to go a little bit further, and I think it's okay to do that right now. I think the credit outlook is improving. I think credit related issues are definitely going down. Default rates have been declining now for the last couple of quarters, and I think that will continue for the next couple of years. And I think in the end, I think you're going to want to own things, and that's really the difference between stocks and bonds. When you buy a bond, you think, well, I bought this bond. Well, effectively, what you've done is you lent your money out to somebody, and they use it to invest, or they use it to put to work in their business or whatever they do with that money. I want to own things. I want to own. I realize there's risk involved. There's certainly volatility involved, but I think in the end, the advantages of owning things and actually owning something that is benefiting from this increase in economic activity, the amount of money in circulation, all that, I think bodes well for equity investors. And it's not going to be every day or even every quarter where we see this play out, but I think over time, I think that investors are going to continue to get rewarded for that. I still see people paying a lot higher price for the safety of being in bonds compared to the price that they pay for earnings and taking on risk.
Love it, because even that slide you showed earlier with talking about the treasury yields versus the dividends in the S&P 500. I mean, you're getting paid more to own it than you are to lend to it, which is a completely different way than most people think about it. You think about bonds for income, but the earnings on the S&P 500 are significantly higher than the yield you get from investing into something secure. So, and as interest rates go up, the bonds will suffer. No one wants to hold a bond for 1.5% when there's a shiny new one for 3%, where the stocks will benefit.